Montanaro European Smaller Companies Trust is an investment trust in which we hold the shares of smaller companies that are listed in continental Europe. We have a particular focus on those with a market capitalisation of between 100 million and 5 billion euros. There are four main reasons to invest in European smaller companies. The first, and arguably the most important, is that smaller companies grow faster. And so historically, investors have made more money by investing in smaller companies than they have in their larger counterparts. Secondly, there's a huge choice. So we have over 1,000 profitable smaller companies to pick from. The third reason is that it's quite an inefficient market. So most investors and investment banks tend to ignore smaller companies, and that means they're under-researched. We love that because it means we can find the hidden gems that most people have never heard of. Finally, there are diversification benefits within the context of a wider portfolio. Well, the main challenge is time. Not every company makes for a good investment, so you need to be highly selective and do your own homework. That in itself can be quite difficult. Sometimes the annual reports aren't in English, or the factory might be in the middle of nowhere. And that's where having a big and multinational team is really invaluable. Montanaro was founded in 1991, and today it has one of the largest teams exclusively dedicated to European smaller companies. We have 10 analysts, each of whom is an expert in their particular sector. We're constantly monitoring the portfolio as well as looking for new ideas. That means meeting management teams, going on site visits, and even speaking to customers and suppliers to make sure we own the best companies. We're genuine long-term investors, and many of the companies in the trust have been holdings for years. The trust is managed in line with Montanaro's quality and growth-focused investment approach. Our experience is that high-quality companies are the most likely to generate sustainable investment returns, so we're very fussy about the types of companies we own. We like simple businesses, niche companies that are operating in growth markets, and preferably those that are market leaders in those markets. They have to be profitable, and we like businesses that have a high return on capital and are run by good and experienced management teams. Finally, for the good company to be a good investment, it must also be trading at a sensible valuation. Having a closed-end structure means that we don't have to deal with daily inflows and outflows. And what that means is that we can remain fully invested and, where necessary, take contrarian positions without worrying that we'll be forced sellers. The trust also has the ability to use gearing, and that gives us the opportunity to take advantage when market conditions are especially attractive. Finally, there's an experienced board, and they provide independent oversight and governance. Shares in the trust are listed on the London Stock Exchange, and they trade like any other share. They can be bought via an existing stockbroker or financial advisor, and they're also available on a number of investment platforms. Please do seek the appropriate investment advice first, and for further information and updates, please visit our website.